Hello everybody, welcome to this part 2 of today's weekend video review. Today is March 11, 2018 and this video is part of the FibStalker analysis and trading service. As usual, I ask you to pause this video if you're watching the recording and read and accept the disclaimer. Past performance is not indicative of future results. Trading Forex carry a high level of risk and might not be suitable for all investors. Alright, so thanks for doing that, and we can now switch to our charts here, and we're going to continue with the Australian dollar, Canadian dollar. Now this market also had a couple of important developments here. First of all, the 50% short here last week has failed, as you can see here. The 1005 was pierced, and on the daily time frame we also had another development. You remember that we have multiple nested inner here moving measure move here, and the 079.94 has reached the first target. Now this move here had two sequences inside. The first one which hit first and second target, and the second one that has failed. All right, so if this market now in this market now there is the possibility for basically a full 50% retracement. It doesn't mean that it's going to happen, but if it happens, we know that participation is likely to be there. Okay, so we need to then move to the smaller time frame here to understand what is possible and what's going on. So of all, we need to see whether a 50% short is trading, and as you can see here, that is traded last Friday and is being respected at the moment. So it's not impossible for this market to actually move lower on this measure move here. Okay, and that would actually fulfill our one of our scenarios here of a potential retest of 99.60. And so that's something that we need to watch at the beginning of the weeks. Canadian dollar, Japanese yen has fulfilled our projection here of a move lower into the previous measure move, which traded in April, May last and June last year. Was not capable of pushing price higher into the first target, double top, and then 81.68 came basically after 5 weeks, 4 or 5 weeks here. Okay, so there was participation around that level, and we'll need to see now where this market is going to stop. This market is it's very extended here, so it's very possible that if it needs to continue higher, at least it will need to rest a little bit and maybe move lower again. Okay, so we'll see when and if that happens. For now, we have an initial move here, and we can trace on the 4-hour time frame the 50% long here, the first 50% long that failed initially and then held, pro price into first and second target. This gives us the next measure move if the market gets into the 83.02 here. This is an opportunity for a continuation higher, and that's a potential setup for this week, even for tomorrow, depending whether this market is going to retest the 83 level. If it does, and it does it successfully, then the 84 could be in play, and remember, the market could go as high as 84.60 initially here, and then we'll see what happens there. Euro Australian dollar is actually correcting lower here, and this correction might require a bounce here before it completes. We don't know that yet. What we know is the sequence of measure move here. So we had the 50% trading, and it went into that first target. It was not the first target. The second target was not hit, but we can trace the aggressive trace here from highs to new highs, and that's the level I have on my charts. Okay, which corresponds to the first target, by the way, of the previous measure move. So this market could actually correct into that level. Now, before it does that, and then if that happens, I mean, we will need to test participation in that. Now, before that happens, it is not impossible for, given this strong move lower here, it's not impossible for this market to come and correct first and then continue its move lower. Okay, so that would, if that happens, the 157.38 is our level to allow our area to watch here, and that would actually be responsible for a continuation lower here. Okay, that's the area that we will need to watch, and if we get participation in that area, then we can continue into the 155 156 level. Euro pound continue the nothingness and nonsense of this market, which obviously does not offer any edge in a move like this, and that's in line with what I mentioned before. This market here, there is very little to do with these markets. Actually, there's a lot to lose unless you trade the range. That's not exactly what we do, but you can use any of the methods to trade the range here if you want to hurt yourself. I would not recommend that in any case, but if you are capable and proficient with those methods, that's okay. That's that's an opportunity here, but I'm not going to review this market because there is very little. The only thing again that I'll mention is the 90 level here. This market could go and retest that level, and we will see whether this is going to be a move higher or the market is going to bounce lower once again. Okay, so euro Canadian dollar is also correcting here, and this correction has brought price into that 157.47. What's that level? The level is also an extension here. This market has not reached the second target of this measured move, barely, but has not traded it, so we don't consider this traded. But in any case, we can trace the aggressive move here, and that aggressive move has not been tested yet. Okay, so if we see strength in this market, this could be an opportunity for a short forming here, and one of the levels I've indicated here, I'm going to use the lows here, the daily low, two lows. 58.57 could be the level to watch here, and again, this could be the opportunity for this week. Okay, an opportunity to short this market if it has successfully the 158.57 into the 156 157 level. Okay, so talking about 160 pips of potential move lower here. Euro Japanese yen has traded the 50% long that we can see here on the daily, and 50% are always valid levels. Whether they trade or not is something different. That's why we need always to test these levels. Okay, so now the trace here that you can see also on the daily time frame is the lows to highs, and it came into play here, and there was participation, and we will see whether this participation holds or if this market is going to roll over here. There are always two sides of the trade, and of course there are also shorts in this market. Okay, so the long obviously comes from a larger time frame, and so it is relevant, but also we have to remember that the short here it's the shorts here are not holding, and the only short that is holding is really when we consider the highs to lows here. Okay, so it's got kind of a mixed picture here, and the euro Japanese yen has not always been very technical, so we need to be careful here. But the longs are there, there are also shorts, and it appears that these shorts are coming into play here, so we need to be very careful in this market. Okay, there are other markets that are much clearer in terms of what's going on. So the strength in the New Zealand dollar market here is actually pushing the euro New Zealand dollar lower here. And you remember that we mentioned the possibility of this short that has held initially and then failed, but nevertheless the market is moving lower. Okay, so the our take here is that this is a lateral move, and the first level that we would see would be the 160, and that's where apparently this price is moving towards. So we will keep the 162.89 target here if this market continues to move lower, and of course at this point any retraces that find participation become opportunity for opportunity to sell this market. So in this specific case we have a clear lows to lows here from a daily level, which can also be seen on the weekly time frame, and sorry, it cannot be seen on the weekly time frame, sorry. If the market corrects into the 168 169 here, then that becomes an opportunity to sell this market in a continuation lower, as this market is showing its hand here, and a possibility to continue lower into that 160. Okay, so that this would be the opportunity if this market actually bounces, and that bounce could come from a 50% here that has already traded and not held. This could actually hold and be the excuse for that bounce higher, so keep that in mind in case that happens. Pound versus Australian dollar is also correcting lower here, and this market, you remember this market had an extension long here, 171.35. The market was not capable of printing new highs, so we would look for at this point a continuation, a retest of that 171.36. Okay, so this market might bounce higher. This is a range, so there is no 50% there. We can actually trace it, but I do not believe that this level is going to hold. Now, what I believe is not very important, but these markets actually show, when they show these lateral moves, they're never capable of holding the 50%. Actually, now we know that the retest of 71.35 is very probable. Pound versus New Zealand dollar. This market is actually also moving lower here on the strength of the New Zealand dollar, and this move lower shows that an extension is in play, so we need to find that extension, and that comes from a lower low here, and that's the level that it's actually likely to be causing this move lower. In fact, it was retested, the 195, it was retested also last week. Okay, so the opposing move here, it's a 50%, sorry, it's an extension long here, a 50%, and that's likely going to be retested maybe this week if this strong move lower continues, and that's what we are going to see Okay, so 187.14, 187.20, it's the potential move here. So there are also breakdown plays here for this market. Pound versus Canadian dollar. Um, it's also moving lower here, and when we look at this market, what we saw here, it's an extension long, bringing price into the first target. So again, we have an aggressive trace here that, as you can see, is under pressure here, and then we have the next measure move, the full measure move, highs to whatever new highs here, as well as the 50% within the current move that has not been completed yet. Okay, so as you can see, there are different levels, and the closer is going to be the 174.13 level. So the 176.98, it's under pressure here, and it's not impossible for it to fail. If that happens, the next level is going to be the 50% here, and that is not that far, 176.24. Should that level fail as well, the 61% level, now we could see a much deeper and basically a 90% retrace of the previous move. So be ready and open to any scenarios here, because some of these scenarios might actually generate large profits, or the opportunity for large profits. Okay, pound versus Japanese yen here has traded an extension long, sorry, a 50% long here, which was the continuation, which is a first target that lines up with the 160.55, and the now what we are seeing is basically the market actually potentially going to retest that 50% level. As you can see, the first target was not hit yet, and we'll see whether this market continues lower or finds support again at the 50% that we mentioned here, the 146 that has traded. And again, there is the 146.50 that could also come into play if this market continues lower. On the other hand, the first target, it's really close, and the market could also continue higher. So everything is open here, and we will see what this week brings for this market. New Zealand dollar, Canadian dollar, we were looking at 50% here to trade. The market didn't make it to that level, the 93.27 traded. 93.17 was the level we were looking for, and that suggests strength and willing to participate in this market that would kind of uncover here participation from anchors in the smaller time frame, and that's what we can find here to justify this move. It has to be an extension because of that lack of testing of the 50% there. So I'm going to consider for now the 93.37, and this is a level that we identified after the fact, not before the fact, and therefore if retested could actually offer an opportunity for an actual trade. Okay, so this market continues its move higher, and there was an extension here that traded progressing to the first target. This move has not yet ended, and it seems that also on the smaller time frame this market continues to trade on in extensions, and 95.47 is going to come into play. At this point could come into play this week as well, given the strength this market is trading with. Okay, Australian dollar, Swiss franc. the this market is moving higher here. There's a 50% that could come into play. It's a range, so we do not anticipate a 50% holding here, and we will see how this market is going to trade next. We have here, we can consider this 50% that would help us uncover the next measure move. First and second target have traded, so the highs to whatever new highs here are printed could give us the next measure move if this market actually temporarily retraces off of this 50%, 74.84. Okay, the bull seems to be in control here, and also this is a range, so this 50% might only offer temporary resistance. Australian dollar, Japanese yen, this market also has traded 50% on the smaller time frame, and you know, this market has bounced off of this 81.34, so traded shorts and then trading longs. So at the moment it's kind of trapped between these two areas, which offer the opportunity for, you know, sensible moves and trades here. Okay, so on the smaller time frame we need to look at this 50%. It has not held initially, and then and that's on news, so we don't really weight that a lot, those spikes. So we can consider 82.40 traded. This market is continuing higher into the first target, 84.45. That lines up with this extension short where we could have some resistance, and then this price could actually trade the next measure move, which is highs to whatever new highs we have here. Okay, and then if that holds, that means that this area will not be capable, will not be enough to hold this price, and again, you know, then we could at that point likely going to retest the 87.50. Okay, so that's the map and the tracks for these markets, and how to kind of read how to read it. Australian dollar, New Zealand dollar, it's trading at 50% here. The market, the bulls came into and to save the day here a number of times. So this area so far has held, and as you can see here, this area is also, we don't know whether the bull are participating or there is simply profit taking here. If the move higher continues, then the 50% here will come into play. The 0861 here, and that will decide whether this market is just going to continue lower into the first and second target at this point, into the low of the range, or if this market is reversing and will continue higher, reversing on top of this monthly area here. Okay, so there are two scenarios open here, and we'll need to see. Obviously, you know, it's good to trade based on 50% levels and not based on what we believe it's likely to happen. And talking about 50% here, the CAD Swiss franc has not respected the 50% level, and has moved now into the 50% short here from lows to lows. This is an extension short, in line also with the fact, with a potential continuation lower now that the 50% has failed. So we'll see if that happens. This area here could be an area of participation here. Unfortunately, there is very little structure here in price in order to kind of read and obtain a valid violation level here. But I'm gonna use these highs to highs to highs here, and then we're going to use the extension here in order to test the participation at this level. Okay, so this is an extension though, so we have to be very careful here, because the market could break the inner extension on a smaller time frame and then come to trade the daily extension long here 73.65. So always take these trades only if you are capable of generating a risk-free trade. Okay, otherwise they're too risky and it's not worth when there is no structure in price. Euro Swiss franc here. Let's look for the price, and this extension long at 115.13 has traded, has been defended a number of weeks here, and it has targets above. The first target would be the closure of that nasty gap in the beginning of 2015, and then the 122.30 level, which is actually the second target there. Now this market moved very strongly last week in extensions, in fact, and the 116.50 is a potential area where we would look for a continuation in this market. Okay, if this market gets into that area and then continues higher, that would be an opportunity for a long setup. So we need to remember and watch this level this week. The 116.50, it's very important level here, and could come into play for a continuation higher in this market. Pound versus Swiss franc. Pound versus Swiss franc has traded the 50% long here, as we can see here, and so there are always two sides of the trade. The we need to see what it does. The short here on the weekly time frame will step in, and as you can see here, there is potential beginning of a participation here. So we'll need to test that. We'll need to test that level. Okay, and highs to highs. First and second target hit. Next measure move, highs to highs, 31.30 level here. It's going to it's actually it could come into play here, and if it pierces, that would be a confirmation of the shorts, in which case the market at that point would be you know, a market that would be a confirmation of a market moving between the 128.60 area to the 131.76 area. Okay, so that's what we see here from the current levels and the way algos are positioned in this market, as well as our consideration of price discovery. Okay, New Zealand dollar, Swiss franc. This market is in a lateral move and continuing higher now. The 0.7067 here could come into play again. Very strong move higher. The New Zealand dollar has been strong all over the board here, and that move is continuing here. The 50% short has been pierced. However you want to trace it, even from the previous highs, it's not yet pierced, but it's very close to pierce that level as well. And if that happens, then you know, any correction we might get, we're going to use the extension here to capture the next measure move. Okay, and because this is really a range, we should see we should see the highs here trading again. That's not impossible. And last market here is the New Zealand dollar, Japanese yen. And this market is moving on a 50% long. This market too has retested a 50% here, and it's range bound into 81.64. The New Zealand dollar is very strong, so we could see this market trading the 50% very quickly here, and that level might not hold, because this is a range, and 81.64 is the level where the resistance might be. So this market is continuing higher here and could continue into 78.74, and after that we could get an extension, a new trade, an extension long here from highs to whatever new highs we have. Okay, so this is it for this weekly review. I'll see you in the room, and happy trading. Bye bye now.